In the first White House press conference after the unprecedented downgrade in U.S. credit rating, President Barack Obama has confidently backed his country's financial health. But Obama's efforts to calm investors have failed to stop global stock market panic.
American President Barack Obama said that U.S. Treasury securities remain a safe haven for global investors, whatever credit rating agencies say. The remarks on Monday came after Standard & Poor's stripped the nation of its top-notch credit rating last Friday. The president also notes that the first-ever downgrade will give Washington a renewed sense of urgency to cope with long-term fiscal challenges.
With respect to debt, our problem is not confidence in our credit. The markets continue to reaffirm our credit as among the world's safest. Our challenge is the need to tackle our deficits over the long term.
Obama also reassured Wall Street that the U.S. will always be a AAA country despite the downgrade.
The markets, on the other hand, continue to believe our credit status is AAA. In fact, Warren Buffett, who knows a thing or two about good investments, said, if there were a quadruple A rating, I'd give the United States that.
The president says America's economic woes are solvable with enough political will. He notes the downgrade was due to partisan gridlock, not America's inability to pay its debts. Last week, Obama signed a bill lifting the nation's debt ceiling and cutting spending. The measure came after a decisive month-long debate between Democrats and Republicans. Obama acknowledged that the prolonged debt ceiling tussle could do enormous damage to the U.S. and world economies. He also pledges to unveil his own solutions for solving the U.S. debt problem in the coming weeks, including extending a payroll tax cut and unemployment benefits. The hastily arranged press conference still fails to soothe market jitters as the downgrade news sent stock markets tumbling globally. U.S. stocks suffered greatly Monday as the S&P 500 and NASDAQ index both plunged over 6%. The main U.S. share index, the Dow Jones, has plummeted 5.6% despite Obama's bid to reassure markets. Meanwhile, investors rushed to pull out their bet on the equity markets. The stock markets in Europe also suffered significant declines the same day despite a promising start. Germany's DAX has closed down 5.02%, while the CAC in Paris 4.7% lower. London's stock market has slumped with the FTSE 100 index ending down 3.39% to close at 5,068.95 points, hitting its lowest closing level since July 7, 2010. Despite the European Central Bank's commitment to purchase Italian and Spanish bonds, stocks in Milan and Madrid shed 2.43% and 2.44% respectively. In other markets, the gold price is pushed higher by risk-averse investors. Gold futures rallied 4.2% to close at a record high of $1,718 per ounce. Oil, which is regarded as a risky investment, has fallen 6.41% to $81.31 a barrel.